Hey all, welcome to ShareTreck, where science meets investments. And I'm your host Raj. Friends, today I'm going to talk about supermicrocomputer, ticker symbol SMCI. This company lost over 16% of its value in a single session. Since then, it has tried to recover. This is day 2 after that. Today I will share my opinion about what happened. We'll walk through their earnings miss, what the company said about AI demand, why margins are under pressure, and whether this drop is a signal to exit or a chance to buy the dip. Let's get into it. Welcome back, friends. For the fourth fiscal quarter ending June 30, SMCI reported adjusted earnings of 41 cents per share on $5.76 billion in revenue. That was a blow. It was well below Wall Street's expectation of 45 cents per share and 5.98 billion in revenue. So we are looking at a double miss, both top line and bottom line. And in today's AI-fueled investor climate, that kind of disappointment is very hard to forgive. So friends, if you're finding this kind of a video useful, please do not hesitate to press the like out there. It really helps get this video to more people like yourself and help grow our retail investor community. Thanks for that. But it wasn't just the earnings miss. SMCI's forward guidance also fell short. The company projected Q1 adjusted earnings between 40 and 52 cents per share on revenue between $6 and $7 billion. That's noticeably weaker than the street's estimate of 59 cents per share on $6.6 billion. The numbers show that while revenue might grow modestly, earnings are not keeping up. And that's a red flag for margin performance. SMCI's gross order margin came in at just 9.5%, below prior guidance. Management cited capital constraints and delayed customer orders. These factors contributed to both the earnings miss and the softer forecast. While revenue might recover in the upcoming quarters, margins are expected to remain flat, and that's the main thing. In an environment where investors are looking for operational leverage, the flat margin story doesn't inspire much confidence. Here's the big picture concern. SMCI was probably one of the biggest beneficiary of the AI server boom, especially with NVIDIA-powered servers. But that demand is now showing signs of deceleration. Competition in the AI and server hardware space is intensifying, and consumer budgets are being reassessed in the current economic situation. Some buyers are delaying purchases, while others are shifting spend to some other more favorable vendors. The once hot AI server sector is cooling with more players in the place, and it's cooling just a bit, and that's hitting SMCI hard. A large part of the after-hours price drop was likely due to algorithmic trading. These systems automatically react to earnings misses and downward revisions, triggering mass selling. That creates sharp, exaggerated moves, even if the long-term picture hasn't fundamentally changed. It's worth noting that this kind of volatility isn't new for SMCI. Just earlier this year, the company narrowly avoided a NASDAQ delisting over delayed filings. While that risk is now behind them, it's clear the stock still trades with a high volatility profile. Despite the rough quarter, I think SMCI's guidance for fiscal 2026 is still strong on paper, at least. 33 billion in revenue, it's not something to sneeze at. That's a substantial increase over previous years. But investors are now wondering, is that still an aggressive growth target in a maturing AI hardware market? We have seen similar dynamics playing out across the sector. If you recollect, AMD, for instance, also saw a pullback recently, and there is growing debate about whether these shortfalls represent temporary noise or something more structural. I think in terms of bottom line for us retail investors, I would say that SMCI's stock drop was driven by a perfect storm. Missed expectations, weak guidance, margin pressure, delayed orders, and concerns over slowing AI server demand. However, long-term growth, I think, is still intact if SMCI can maintain leadership in AI server design and execution. Whether this is a buying opportunity depends on your time horizon. If you're a long AI infrastructure believer and believe in SMCI's roadmap, this dip could offer value. But if you're looking for near-term upside, the next few quarters may remain choppy. Well, friends, now it's a time to take a quick look at the charts. Here's the price chart for SMCI, and this particular chart has each candle which is 1 week long. Now, if you look at this particular development out here, the recent drop that we saw, in my mind, I would think that it could be the beginning of a bull flag. A bull flag always is something that comes where a flag is formed on a bullish channel. So if that has to happen, we need to see a few more weeks of developments to see if we start getting candles across the sides, and I think at least 4 or 5 candles are needed. So from a weekly perspective, at this point of time, it's not clear what is happening out here. So let us go on and have a look at the daily perspective. I'm changing it into the 1-day chart. And now if we look at this, you can see that we had a support level out here, and that support level has held. It held yesterday and enabled the share to break a huge fall that happened. And this fall was, I would say, approximately 20% drop. And since then, this morning, we are positive. We are forming a I would say inverted hammer kind of a structure out here. And during the day, if we continue to move sidewards, that could be the beginning of forming a bear flag, because right now, if you look at what we have here, I think this is the flagpole for the bear flag. And typically, if this develops into a bear flag, we should have a consolidation sideways, and then we would see that we have exactly what's the length of the flagpole. That's the potential of how much it can go down. It can go down all the way up to $32 if that comes to happen. Sometimes this flag may also end up going differently. And that could be, for example, the flag may be at an angle. We have seen those kind of flags before, in which case, wherever the stock exits the flag, from there we'll have to draw a target. But needless to elaborate this further, basically we are looking at a bearish situation right now until proven otherwise. If this potential bear channel fizzles out, goes upwards more than 50% of the flagpole, then it's no longer a bear flag, it's no longer a bearish indicator, and then we can start looking at potential for it to go up further. You look at the RSI, it's very low. Momentum is also low. MACD is also very bearish. And overall market sentiment on SMCI has just started becoming bearish. So things are not looking that great when we look at the technical chart. So personally, I would be staying away from SMCI because my risk threshold is very low. And at this point of time, anyway, I'm thinking that we are overdue for a correction with all stretched valuation, with the tariff wars going on and geopolitical stresses increasing recently. And I think in this kind of a situation, my risk threshold doesn't permit me to speculate in such risky stocks. If you recollect, companies of this size, which is around 48 billion market cap, they are susceptible to a lot of shorting play. I believe a major shorter had come up with a story that SMCI was probably cooking its book or something like that, and they released the report, and that tanked the SMCI share, and then it delayed their annual report from being quarterly report from being filed. And as a result of those repeated delays, the stock exchange had notified them that they have to comply or else they will be in trouble with the listing. And they finally complied, and they have put all those things behind them. There is nothing to prevent those kind of short sellers again targeting SMCI. So that's the other worry I have. So whether any of those rumors or reports have any merit is a different question. But from my perspective as a retail investor, I'm more concerned about the risk. And I think the risk is a little high for me. It may be different for different people. It's not one size fits all. These are my personal opinion, not financial advice. So please do your own due diligence. And friends, if you're not yet subscribed, can you please subscribe and help grow this channel? Now, I have a question for you. What is your take? Are you buying the dip in SMCI or waiting for better clarity? Please drop a comment below. And this brings me to an end of the video. I'll catch up with you again in the next one. Bye for now.